What's up? What's up? What's up? What's up, everybody? Good morning and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody's had an amazing New Year's. Welcome to our first live session of the new year as we are in our Daily Market Commentary, getting ready to roll. We're going to do what we do each and every day, identifying both breakouts and reversal trades from an educational perspective. And what we're looking for here are quality opportunities on the day as we are seeing a little bullishness this morning in the market. If you're new to the channel, make sure that you hit the subscribe button so that you get the notifications and all the alerts whenever we do go live. We go live every day at 7 a.m. Central. If you're a regular returning viewer, hit the thumbs up button. Means a lot, helps the computer a lot. I know there's a couple of you watching right now. Click that thumbs up icon. It helps a ton. All right, let's go ahead and get rolling. Let me shrink down the size of my gigantic coconut this morning, and we will get started. So last night we were in our live trade room and talked about the fact that I wouldn't be overly surprised on a daily chart to see a bit of a pullback on a daily chart, because typically what the S&P does is once the S&P gets a new all-time high, you typically get a little bit of a pullback. Now, on the idea for a pullback, I would be looking somewhere down in this range here, this 37.24 as my best area. Now, in the overnight, we had a really strong rally up right at the London Open. So those of you trading the London Open, you did have a quality breakout opportunity right above here, especially visible on the 15-minute chart. So I'm not sure if John, if you're in this morning, or Nick, or any of you, or Jose, any of you that are across the pond, any of you catch that breakout when it happened this morning? Because that was the best opportunity, was the breakout above this region right here. So hopefully you're able to catch that one as it came up out of that level. That wound up being the better trade. Now, on a retest, if we come back in and retest that area, you've got a little level right here that may make for a good retest if price comes back down to this 37.52. Busy elsewhere. That's okay. But the level is still valid for a retest. And I'm going to put this as a purple because it's a 15-minute chart. Some ES demand you marked at 37.35, Dennis. Yeah, so that 37.35 area off this level right here, I assume is what you're referring to. The only reason that I didn't select that one, Dennis, is because it's a little bit in the middle of the move. And with it being kind of in the middle of the move, I went to the origin of the move. Now, the other reason why I didn't select the 37.35 is due to the, excuse me, is due to the volume profile. And volume profile is important. Well, not fresh is not as clean, but also the volume profile, because if I throw my, and I know we don't cover volume profile in the daily market commentary, but I'm at least going to just show it real quick because it was an interesting thing that we discovered last night when we were taking a look at this in the live trade room. So if I throw my volume on the chart, you can see that, look at the huge volume we had, right? Put an hourly chart up there. The huge volume we had on this candlestick rocketing up, right? Big volume, big volume, right? But if I change that from volume to volume profile, and I look at the one-day volume profile, what I see is that my high volume node is at the origin of this move. And I've got a little bit of volume that came in where this zone is. There's a little bit of volume that came in, and it is a little bit higher than the average, but my true volume node of control was down here. That's my higher volume node of control. And so that's part of the reason why I selected that lower one, was because of kind of where that ticks off, right? I mean, we're looking at the volume areas of control, that are where our most volume occurred at a given price, and then we're overlapping that with the time of the volume spike. So I know I don't go into that normally in the DMC, but that's why I have that lower one selected. All right. Next, in the NQ. So in our NQ position, we talked about the potential for the breakout above the high to create a new all-time high. We did not get quality basing here before the breakout. We basically gave it a touch, pulled back, and then popped through it. So you may or may not have taken the breakout trade. It probably didn't set up properly. Well, I know it didn't set up properly for a full breakout, but I do have a retest area here that would make a lot of sense. And that was able to create a new high above that region. So you're looking at 12,877 by 12,858. Okay? That would be where that area is, and hopefully that one could have another opportunity for a breakout above here. I mean, we're only up 60 points in the NASDAQ, and we've seen we can certainly be up more than that. The Russell. So the Russell last night did come into our potential area of supply. We did not get enough to the trigger point of that supply area, and we've sold off a little bit. I don't know that this level is going to hold. I didn't really love it last night because we were basing in front of the level, which is the kiss of death, right? So trading and basing in front of the level makes that kind of the kiss of death of that trade. I will say that this is an old line of support. Old support becomes new resistance. And so I wouldn't be overly surprised to see price break above here. It's not a traditional breakout trade because in order for it to be a true breakout trade, I need 3 touches to a level. I need basing in front of the level. But I'm just showing you that that line of old support often becomes new resistance. And so this, to me, would be an area that we would consider an area of control. Now, it's also right around the whole round number there of 2,000. So, you know, when you talk location-wise, getting in above here is a low-risk entry as long as your stop is below the last pivot, even if it doesn't give me a clean breakout entry to begin with. And that's I think one of the things that are most difficult is oftentimes people are so focused on looking for the perfect entry that we miss the opportunity around what is just a good trade setup, right? We miss the opportunity around just what is a good trade setup. And I think that the Russell could be setting up for a good trade setup, especially if we get a little bit more basing in here and we get above kind of this line of control of 2,000. So now what you then may do is let it get above 2,000 and wait for a pullback on a 15-minute chart as a chance to get back in, or if there's basing right around that 2,000, then get long on some sort of a breakout, right? This is when it would make sense to look to splice to that smaller time frame. But there's no doubt that this 2,000 is a line of control. When we talk about a line of control, it's where have we seen price revisit that number on multiple occasions, and so it's going to act as a magnet for price. And when we get above there, the chances of us retesting that area wind up getting pretty high. But I wouldn't be overly surprised to see something like this occur, where we come back into that region and then we chop a little bit and then we grind up from there. And so that wouldn't be overly shocking to see in this region again. Does that make sense to everybody? Type in the chat box if that makes sense to you, and hopefully that corresponds. Because I know what happens is sometimes we get so caught up looking for the perfect entry that we just miss a good trade. Good, Vince. Good. Beautiful. Welcome, by the way. Happy New Year, brother. By the way, if you didn't already do it, do me a favor, throw a thumbs up. Hit the little thumbs up icon. It means a lot. Helps the computers a ton. And there's a little share button. You can copy the link, share it out to your social media friends. I'd appreciate it. Let other people see what we're doing this year. Really would like to grow the YouTube channel this year. All right, so let's go ahead and share this grid. I forgot to put my trade update page, so bear with me while I work on another screen for a moment. Well, but it looks like Justin actually already posted a trade update for today, or a trade idea for today. All right, so there's our equities position. Let's go ahead and look at our energies and metals. So last night, our crude oil, we had talked about the fact that we could pop above here, and then if we got basing, it sets up for a breakout. First of all, did we get quality basing here? Absolutely not. No quality basing was set up in this position. No breakouts were harmed in the filming of today's episode. As we broke out, but without the quality basing, without 3 touches. So no real entry. Well, since you have no real entry, notice the very nearly immediate pullback. And our iron condor position, which I think has 9 days left in it, is still safely in between its range. And we looked at that one, I think it was way back here, right after the rollover. And so I really don't have anything from a directional trade standpoint to add. And the reason I don't is because we rallied up, but notice on our way up, we created a demand area. We created a demand area. But we broke through both of those demand areas without even thinking twice. I mean, it just like a proverbial knife through butter, right? Just sliced it. However, we did get what I would consider price shock. These big red candles would be considered price shock. So since those are considered price shock, I will say that on a smaller time frame, you do have at this 15-minute wick over wick. Now, obviously, your stop still has to go above the pivot, right? At the tightest above this red candle. But you've got an entry there that allows you to join in the move down if price does keep coming down. So I think that's a low risk entry. Now I will say that it's higher risk because we're still in an overall sideways price pattern, and so anytime you're trading in a sideways price pattern, it's a little bit higher risk. But I wouldn't be shocked to see price trade back up into there and then down to like 47.60 as a target. So keep that area in mind. Now, gold, just the opposite. Gold, we talked about the fact last night that we had popped above our breakout line, and that if you took the iron condor in here, it's probably time to close that thing out. And if you didn't close it out, our short strike was 1935. We've popped above 1935, and so that position, we talked about it last week, closing it out before the end of the year. Some of you did. I got a couple of people, I'm sure, that closed that thing out before the end of the year for a small profit. If you didn't, it's now popped out above. It's probably a small loss position. Not too bad because you got a fair amount of theta decay. Now, if we pull back, we talked about there's this gap fill level, which is the end of the year gap, and may not get retested anytime soon. And in the overnight, we put in this level here. Now, let's see if that's any cleaner on a 15-minute. It's actually a little bit less clean on a 15-minute. On a 15-minute, I don't like it nearly as much because we rallied up and then went sideways before then rallying up again. So on a 15-minute, you're probably better off just looking at this area here, which is before the origin of this move higher. All right. Nat Gas, we talked about a potential for a gap and go in Nat Gas. That trade is still a potential, but we never got above our first candle's high, right? So Nat Gas still has yet to get above the first candle's high, so it's still in play. If we fade the gap, I'm not looking at the gap fill. I'm looking at the wick over wick below the gap fill, right down in here as a potential reversal point if we fade that gap. The gap and go is still a possibility since we didn't get above the high yet, and we gapped above the prior day's range. We gapped outside the prior day's high, and our big picture trend right now is technically up, right? Higher swing highs, higher swing lows. Although, a lot of people, when they look at this, they say, oh, our big picture trend is down. But our trend is based off the last and most recent swing highs and swing lows. A great indicator for that is the zigzag indicator, which will help me to see swing highs and swing lows in this position. All right. And then copper, we looked at copper last night, and copper did pop into our little wick of the flyer, and it was a Globex level that just didn't hold, and we came through there. I'm not going to really add anything else to this one at the moment, although this one's a fairly clean demand because it was enough to get us through the supply. Actually, that will be worth adding because it was a strong enough demand to get us through the supply, so I think it could be okay. All right, let me share this one out. All right, next, let's go take a look at our ags. Looking at our ags, so there's soy. We looked at soy last night as a potential. We did get a pretty big breakout trade, and it is now kind of run from that area. Could we get a retest of that level? Absolutely. We could get a retest back into this level for a chance to get long, or even the gap fill area right here. The better level, I still think, is the demand level down here, but we've got an alert set up for a pullback on that one. Corn, we were a bit overextended last night, and it continued to march a bit higher. If we get the pullback into this region, this would be where we would look for our long. We've got a gap fill area, and then we've got a 15-minute level there at 481 by 479. And you've got whole round number resistance there at 500, so potential for a breakout above that whole round number resistance there at 500. Wheat, we had another one where we broke above the high. Popped a little bit around in flips and changes. And so if we see the turning of the tide there and price comes back to there, that could be a decent entry. I will say that we do have a possible entry right in here at this 639 by 636. Stop it, have to go down there below 634. That's a pretty clean level, and I'm looking at it mostly because of these wicks over here to the left. So what these wicks over here to the left do for you is they show me that, okay, hey, we had some selling pressure that came in. And the selling pressure came in and dropped it down a little bit each time. So that was able to, take enough time to wipe out all the sellers. Now, the problem is this level is not fresh because we retested it last night with this long lower wick right here. So knowing that it's not a fresh level, it has to be a confirmation entry. All right, let me share this grid out. All right. And then bonds and currencies. I will tell you, there was almost nothing to look at last night in the currency markets as we set up for our Sunday session. There was really, really just a lot of nothing. I'm not even going to talk about the bonds. We're just going to slide right through them. And the reason I'm going to slide right through them is because look at our 4-hour chart there. Look at our 4-hour chart there. And all that sideways price action is just a hot mess. There's really no reason for me to try to figure those markets out. So that means that we then move over and take a look at the euro and the Canadian. So the euro is sitting down below a potential breakout trade. And that breakout trade is at like 1.233. So sitting below that 1.233 would be the basing and then price moving higher. If we get a pullback to this region here, 2287 by 2279, I think that actually is fairly clean, formed at a pretty good time of day. Our overall trend direction is indeed still up, although this kind of price shock pullback was pretty big. I think that if we fail on this next level of demand, then we're going to start to see more weakness creep in, and we may get a deeper pullback. So that's why that level of demand that was created in the overnight is actually pretty important. So You still have a basing breakout above here and a retest to this level down here. Canadian dollar. So Canadian dollar last night, we got a little bit of a poke above. Our basing wasn't immediately before the level, although these little wicks here might have gotten you in if you were looking at it in the overnight. I will tell you I was not, because when it did the breakout at 2 a.m., I was dreaming of, sugar plums and dancing and whatever. I don't know what I was dreaming of. I'm just kidding. But anyway, when I look at this, I'd have to say, where's the pullback opportunity now? Since I didn't get the good breakout entry, and I've got before the New Year's shift, there's this wick over wick here below a pivot low, which is one of my very favorite setups. So I'm going to leave that one in line. Okay, let me share this one out. All right, and then last but certainly least, but just based on the fact that the markets aren't giving us a whole lot from the currency perspective, in our New Zealand dollar trade, we're not moving at all. Bank holiday on there, and so we had a little bit of overnight, but as far as the New Zealand dollar, it's just really not moving hardly anything. A little bit of movement in here, but not enough worth setups and trades that are going to be very effective. We might get something once the market opens up, but for now, I think you've got a potential of a retest level down below us, but nothing new to add aside from that wick over wick that we've got there at 71.67. Great British Pound. Now, the Great British Pound did give us a potential for a breakout. Matter of fact, we got some basing here before the level, and we did pop above, and everything was following suit. 1, 2, 3, 4, 5, 6 candles later, the market has gone nowhere, telling us, okay, you should probably get out of this trade. If you didn't get out, 7, 8, 9, you got up to 10 candles of allowing you to get out before it then sold off. So you had plenty of room to use the 6 candle rule. Now, on our 4 hour, we're still in an uptrend. And so since we're still in an uptrend, although we're putting in a lot of selling pressure, there's this 15-minute level of demand down below us. If that level of demand gets violated, right, if that level of demand gets violated, we will definitely be putting in new lower lows, and we'll be looking for shorts at that point. I still think you actually, based on today's momentum, could get an opportunity for a short right up in here, just based on the momentum, if you want to give that a flyer upon the return back to that level. Japanese yen. So the Japanese yen also didn't get quality basing, one touch, and then we poked above it on the second touch with no real basing. So there was no entry there. We were looking at that more as a resistance line. And tweezer topped up here at the very, very top. So whenever I see a tweezer top up here, I typically will pay attention to that. A tweezer top is a really, really good candlestick formation that will oftentimes give you an indication as to price changing direction, and it does it fairly quickly. And so when I see those kind of tweezer tops, I anticipate a pullback to come, and we did get a little bit of a pullback. Now, on a 4 hour, technically still in an uptrend. Nothing has changed. And so I've got to look for areas of demand for a place to get long. Well, the only one I've got down here is the Globex area of where the market opened yesterday. Now, if we get to that area, and let me make that pink, because that would be our color for that level, that would be above a pivot low, rally base rally. Price comes back into here, we may see a potential for a turning point. But if we make it back to there on our 4 hour chart, are we still in an uptrend? Well, the answer to that is yes, because we will not have put in a lower swing low. Our swing low is down here. So that would still leave us in the uptrend, giving us a potential for an entry. Okay? And then the Australian dollar as our final market here, putting in a little bit of what could be, I joke around, I jokingly call this the Batman cowl, as we've got these two, here's the ears of Batman's cowl, putting in these, which is really a funny looking double top. Now, if we get above that region, I think there's room for price to run, obviously, but we would need basing. But we could see a bit of weakness from here. It's all going to depend on, is the dollar going to continue to show us a little bit of strength? And if the dollar shows a strength, then we'll see weakness in most of these currencies. Let me share this one out. All right. And let me post this into the grid. Now, a couple of things real quick for all y'all. His cape isn't there yet. We ain't tugging. You can tug on Batman's cape. He's not as tough as Superman. You don't tug on Superman's cape. You don't spit into the wind, but you can short Batman's cowl. I guess I have way too many superhero references when it comes to my trading. Is that about right? So now, one thing I wanted to make mention of real quick, if you are fairly new to trading, or if you know somebody who's fairly new to trading, Traders Army has always, we've always attracted traders that have a little bit of experience, a little bit of a background, but we're working on building classes that are for people that have no background whatsoever. So if you know somebody who's interested in learning more about the financial markets and they're new to the markets and they want a way to get in that's not going to cost them 50 grand and that they're going to be able to dip their toe in the water to see if this is something they want to learn about, send them here. Send them to tradersarmy.com. Click on this attend an upcoming free workshop. We've got some opportunities there for them to join some of our workshops, and they can come in and learn a little bit about what it is that we do. So if you guys have questions, shoot me an email. I'd love to help you with that. And I would I'd appreciate anybody that you think wants to learn about the market, sending them to us. That would mean a whole bunch for us. So, all right, everybody, I hope you guys have an amazing day. Dennis, my movie collection is thick. So, all right, guys, talk to you soon. Have a great day. See you tomorrow. Bye.